What is the first step that you think Starbucks needs to take to amend the downtrend that they're in right now?
Boy, first step. I mean, there's a lot of steps that probably need to be taken. But first one, aside from admitting the problem, and I think the problem you guys hit on earlier, which is average check growth has really exploded since pre-COVID levels, at least the way that we measure it. Last quarter, it was up about 50% on a cumulative basis. They, explained some of that away from the growth of cold beverages and food attach and some larger party sizes, but that's a big jump for the average consumer, just to know that relative to just 4 or 5 years ago, you're spending potentially 50% more every time you go there. So how do you address that? I think it's effectively dealing better and maybe zooming out a little bit, realizing that they're effectively by footprint the second largest brand in the United States from a restaurant standpoint. And the second largest brand probably needs to have a value offering on their menu. I don't know how they gracefully do that in terms of managing through that, driving traffic while also preserving earnings and same-store sales over the next several years. But it does seem to be potentially the direction they need to go, at least in the United States. That's how you spur traffic, right? You start giving consumers reasons to come back more frequently, aside from just product innovation.
John, good to see you. You always bring your A game. It's Brian here. It's been a while. Good to talk to you. As an analyst covering Starbucks, I'm gonna put this very simple. Do you want to see Starbucks making an energy drink and things that may look like boba tea?
Look, innovation is always important here. I worry that you're going to be opening up more. I mean, they're always competing, right, with other alternatives across beverage, right? So C-stores have already had energy drinks. A lot of their competitors already have energy drinks. So them offering it is probably good to get rid of the veto vote. I just don't know if it necessarily means that they're driving incremental traffic to their stores, which is what they need. They need more traffic coming in. And the risk that they're running is you're just getting, myself who's coming there getting a cold brew saying, all right, maybe I'll try an energy drink this time. But does that get somebody off their couch to go there rather than just grab, something out of the fridge that they might have already bought earlier in the week, or just brew some coffee at home or grab some cold brew that they got from the grocery store and fill it up that way, or satisfy their need for caffeine that way. So boba in energy doesn't necessarily excite me, but maybe it'll get some folks to show up.
I'm not trying that. They let me down with that lavender latte. It's a freaking disaster. I mean, it's awful, John. But let me ask you this: that earnings call from Lax, that was a tough listen. Now he has settled into this gig. Now I don't expect you to tell me, yeah, he deserves to be sent packing. Maybe that's my job. But do you get the sense that he just may not be the right CEO at the right moment for Starbucks?
I think there's a lot of frustration in the investment community with what's happening, and the investors want to hear a better, bigger, bolder plan from the company, perhaps some hard decisions around their path forward in the United States and in China, right? That market alone, it seems as if their business continues to be contracting, not expanding, and there's not a great justification as to why they're, adding more capital to that market, why they're growing there, and what the long-term plan is going to be to combat some of this low price point competition that's come in. So it's challenging, right? And I don't have a simple answer. I just know that a lot of investors are very frustrated right now, and they want a lot of hand-holding on not only what they're going to do from a sales standpoint, but the simple, well, quote unquote, simple things they can do from a cost saving standpoint. The idea of, hey, here's our plan for cost savings over the next several years, the gross number, the net number, and how it's going to waterfall through. And here's some very specific examples as to how we're saving costs at the store level, as well as at, across the supply chain, and what that means from a margin standpoint today versus the next 3 or 4 years. I think those sort of steps will help re-engage a lot of the investors who've just said, I'm not touching this until I get a better idea of what the heck's happening.
Well, also, John, a lot of consumers are saying, I'm not touching this when the latte is $8. What does that latte have to cost to get consumers back in the door and not, as Starbucks said, which there are questions about, keeping the latte in their cart and not checking out?
Yeah, I don't know the answer to that. I'd love to know what that threshold price point is to get consumers to come back. They are obviously trying some stuff starting this spring with opening up their app to non-rewards members for mobile order and pay, and alluding to the idea that on Mondays there's going to be offerings dropped to everybody. That's effectively their way they're going after discounting. We might just be in a tough period if they're not willing to lower prices or set up a lower price point and lower entry price point on the menu for customers. We might just be through this transition period over the next few years where, they hold the line on price and check, and consumers just have to readjust to this new environment or where their prices are. And that just means you're kind of in choppy traffic land for a while. And that means in order for earnings to grow or at least hold steady, you've got to find cost savings elsewhere in the model. So I don't have a great answer for you on what that price point can be. I just know that today what they're charging is not an alluring proposition to the average customer.